Stock market analysis and projections. We're going to look at the S&P 500. Before I do that, make sure that you read this slide. This talks about our approach to the markets, our analysis, and how you then would use that analysis for your own trading, and the important aspect of trade ownership. No matter what we say, no matter what you hear from anybody else, if you want great success, you have to own the trade. You have to manage that trade and decide the amount of risk and decide when you get in and decide when you get out, and use the information that other people give you as a guide for you. But it has to be your own trade. That's really what is very important. Stock market analysis, S&P 500. We're going to look at that SPY and all of our charts for with our proprietary studies that level 4 gets. Now, if you didn't see that special that we have for level 4 right now, it's just $99 non-recurring. Go to the top of the askSlim website and you will be able to see that special with our new alert system. So fantastic. Let's take a look now as we switch over to the charts. This is the SPY, S&P 500, weekly, daily, a daily with our momentum indicators here, and a 2-hour chart. I always look at this multiple time frame information because it's important, because it has our option bias study on there, our slim ribbon PO on there, and our market condition indicator on there. A great way to have our proprietary level 4 studies up on your screens, and I think this is extremely valuable, and I'll show you why. Let's first look at the weekly on the S&P 500 as I blow that up. Now, there's little arrows up in the top here. I can just scroll across and look at all of those charts right there just by clicking a button. So I want you to see how that works and how easy this is. This is the S&P 500 cycle analysis, and you want to learn about cycle analysis, go to our workshop tab, and there's a free video in there. This is the rhythms of the market. This is the heartbeat of the market. It is the periods when money is coming in, or money flows are positive, and the periods when money flows are negative. There's nothing, metaphysical about this. This is science. This is money being able to see visually the money coming in and money coming out, and we do it. We turn it into an art form for you to get these great visuals and hear and really understand the market. This correction right over here, you could see was beautiful. 2 cycles pushing to the upside, and then only a modest correction. That's what we call the swamp cycle, because this was so strong it would not let the market come down. Once the momentum turned down, and that's our reversal scout right over there, it then tells us, well, they're both going to move down together, and you could see we got this correction in here that was 10.9% in the S&P 500. This correction over here, you see it came later. So this was called a right-hand translation. It translated very strongly, with the peak well above the trough, well above this trough, which was well above this trough, which was well above this trough. That's what defines an uptrend, of course. And this advance right over here lasted a long time. The correction we thought would be 5.3% to about 8%, ended up at 5.9%. We thought it would be shallow, and that was correct. And then we said, well, it's likely that the next rally goes to a new high, and that's what happened. Again, we had the reversal scalp turned down here. You went into the correction, and the reversal scalp turned up right over here and in this rising phase. This is a strong market, as you can see. You note the yellow zones. That's where those corrective phases are. That's where there's downside risk for a potential large drop. That comes way out over here in Q3 and Q4 for the stock market. What we're looking for more likely is a more shallow decline out over here into the summer months. This takes you out into July, August, right over here for a corrective period. But we have no top yet, no sign of a top yet, other than what we're seeing in some of these other indexes, where we see the weakness coming in the Russell and the weakness in the Dow, while the at the same time, very negative breath going on, but the market being held up by a few stocks that are heavily weighted in the S&P 500 and in the NASDAQ. By the way, the S&P 500, right now, the top 10 weighted stocks, equals 35% of the indexes. That is the largest number in decades, and shows you the narrowest leadership that we have seen in decades. And once those stocks begin to correct, well, the stock market will be very susceptible. That's why I think this summer pullback will be deeper than what this modest pullback was over here, because the market is very top heavy, and those stocks are likely to get into a correction. So right now, this is positive. We don't see anything here that looks bad on the S&P 500, but I'll show you some comparative indexes in here. SPY weekly, still strong, configured strength. One thing to look at is this level right over here. This is the monthly extensions, and these are resistance areas right in here. They're also targets, and you could see that it got right up to that level. It's going to have a hard time based on the valuations that I showed in the beginning of the show. If you skip that, go back and watch the beginning of the show, and I show you a very important valuation chart. So go back and watch the whole show. A lot of you scroll forward or are just watching a clip here. So it's important to watch the entire show. This area is a tough area, and when you look at the crazy valuations that we have right now, it's hard to make a case that there's a lot of upside left in this stock market. So that's a look at the weekly. This is the daily. Now you can see the beautiful rhythms in here. I mean, just brilliant how these cycle patterns resolve themselves. And this was a very positive period where you have a positive slim ribbon, positive slim ribbon, positive slim ribbon ended right over here. Also, the reversal scout in here was positive the whole way up and then turned down. The reversal scout is more sensitive, so that will give you the first signal. And then we went into this corrective phase. Then they turned positive, as you can see right over here. And, only had a modest little dip right over here. Slim ribbon stayed positive that whole time. And that is telling you the conditions of the market, how great they are, how good they've been. And over here is the option bias study. This was developed for option traders to be able to maneuver their position so that they don't get on the wrong side. Option traders tend to like to fade the market, get into bad positions, and then roll option trades that keep getting bad. And we wanted to develop an indicator that helped you not do that, that helped you stay on the right side of the market. And you can see this option bias study is that. When it's at P3 or positive 3, it's the most positive. When it's at P2 or N2, it's a little bit overbought or oversold. And when it's N3 right over here, it is very oversold and very, very negative. To be very oversold, it would create an orange dot, which is none of those right in here right now. And that is a pending extreme because of pending reversal because of an extreme. We don't have any of those on this chart right now, but that really helps you. We also developed this cloud right over here in order for us to see how the strength is taking it up through into the resistance or support areas. And you can see here that this top channel right over here got right up to that level of resistance that had us put in even another upper channel right over here. That's the S&P 500 resistance that we set up around 550. On the SPY, this is that 540 something. Got up to 544. So this is that area that we think is going to be very difficult to move up through. And this is a corrective period in here that we think will bring it down into kind of this middle support area. So this support right over there is is around 534. This is at around 531. And that's pretty reasonable to get a correction into out towards the end of June, beginning of July. When we look at that, if it were to come down to this level, that's the 78.6 at 523, it would warn us that the next rally is not likely to get as high as this one did. If it broke this level here at 518, that's where that cycle low was, it would tell us that the intermediate peak was being set. There's no way it could break this level unless the weekly chart was giving way. In other words, the upside pressure from the longer time frame is alleviated. And that would tell us that by how deep this can fall. That's the importance of setting this up, because there's huge messaging for us. And right now, as it got up through these levels, this level right over here, which was the peak, which was a high probability it would, and then, continued to move up here, it set a positive structure. And that's what we're in right now, is a positive structure with the highest probability that it kind of takes this track down over here into this support area, and then has another rally after that. Again, if it's weaker, it'll give us a message. If it's stronger, it will give us a message also. This is what the highest probabilities are right now that we're looking at. And again, the option bias study, P3, telling you the long side is the right side for the option positions in SPY. Now let's move over to a comparative chart we want to do. This is the SPY on a daily chart, but we're looking at it with the slim ribbon and an area chart on the slim ribbon, with the slim ribbon PO on the bottom. This is a free indicator, the slim ribbon right over here, that you can use on Thinkorswim if you want to do that. You can get the script for that from us. It's also available on some other charting platforms, TradingView, Wealth365, and tastytrade, of course. This is a proprietary indicator only available through us for Thinkorswim for level 4, and this tells you when it's green, the slim ribbon is positive, and when there's a resumption of upward momentum, it's fantastic. I mean, you can see here's where it turned red and was warning you of a corrective period. Here it turned neutral again and then green again with more upside momentum, and it is still very positive in here. I'm going to show you some comparisons here that I think are important for you to see. So, just keep in your mind what this looks like, and I'm going to look at QQQ. Again, these are daily charts, so you can see it's pretty similar right now, where it's been positive. You've gotten these positive signals, and the QQQ has not given any real ground in here. The market has been quite strong, looking at that momentum, quite strong. Now, earlier in the show, I discussed about the divergence and about market breadth being negative, and about the IWM, which had a fake move on Tuesday to the upside and then came back down. Let's take a look here at this IWM. My screen is a little bit frozen right now, so I'm just waiting for that to come back. And we'll move to IWM and look at this. This has now turned negative right over there, and it is giving you this negative momentum conditions. It turned negative here, right there on June 6th, and so this is now June 14th. And giving you the warning in here that it was weak. The slim ribbon then becomes resistance area. This was that big pop here on Tuesday that it completely gave back and is even in much worse condition. We got confused by this, clearly, because it looked like it was getting better on that pop and then gave it all back up. But momentum is the story, and it just told you how negative that is. So we have that negative condition in the IWM. And then look over here where I look at $DJI at the Dow, and you can see in here the Dow also quite negative, and even giving you that downside resumption on June 11th, telling you that it was likely to continue to the downside, and that's really what we have. You can see how positive it was and all these great signals here for the long side, and how this is turning negative. So again, when you look at that and you compare it to the SPY, you can see in here, man, that is really a huge divergence. And looking at negative breadth here, I'm looking at the stock market right now. The breadth is 3.5 to 1 negative. 600 advances to the upside, and over 2,000 declines on the downside. It's a very weak overall market that is being disguised by these few stocks that are very strong. And I was looking for the potential for breadth to improve, a rotation to occur into the broad market. That is not happening. It's even getting worse. So that is something to be concerned about. Let's look here at the 2-hour, and this is important. This is the market condition indicator. You can see how positive that is right over here. and looking strong. The slim ribbon in here looking strong. That was June 4th, where it turned positive again after having a modest correction and then moving continuously to the upside right over there. This market condition indicator right at 100. It goes from 100 to minus 100. This is not an overbought or oversold. This is the conditions of the market are still super strong. When this turns negative, it will move down through the swing zone, 25 to minus 25, and it will move down through that, and it will tell us about negative conditions there in the stock market. This would be the first of the dominoes to fall when that turned weak. Comparatively, look here at the IWM, and you can see that this IWM move through the swing zone here. This is your test of it right here, your negative move right over here, and it has since continued to move down. The slim ribbon PO giving you either neutral or negative readings this whole time. It's negative right over here, and this is really important again because this tipped us off right here as it moved through here. This is the market condition indicator, level 4 indicator that you can have. You can have, of course, all of these indicators by taking our special on the S&P 500, our special on level 4 for just $99 non-recurring. You get all of that. I'll tell you about that in just a few minutes. So that is a look at the S&P 500. Again, positive there on the daily, positive on momentum, and on the 2-hour positive right over there. So this conditions of the S&P 500 positive. The NASDAQ positive, and the other markets negative. And it's really strange to see this wide divergence. Again, watch the beginning of the show if you didn't watch it. I talk a lot about that, show you some important chart on market valuation and the likelihood that we're going to see an issue in the market here as these once these mega caps get done with their just insane surge that they're in right now. It will likely turn the market significantly weaker because they weigh so much in these indexes. So that's not the case now. This is still on the positive side.